Welcome back to the Crypto Father channel. I am the Crypto Father. Today is the 24th of January, which is hump day. It's Wednesday for me here. I hope everybody out there is having a good day wherever you may be. If this is your first time to the channel, then make sure to subscribe, hit that bell notification button, also smash up the likes on this video. In this video, I'm going to be covering some of the most recent news and going-ons in the crypto world. We'll be looking at what people have to say about XRP, Tornado Cash is going to court, and of course, we're going to talk about OKX and what's happening with that exchange. So stick around till the very end. Here we go. Quick look at the market on CoinGecko lets us know that the market has been drained of about close to, I guess, $200 billion or so, maybe slightly over $100 billion. I believe a couple of days ago it was at 1.7 and a bit trillion dollars worth of market cap in crypto. We're back down to 1.59. However, trading volume is up. Most likely due to the fact that a lot of it has been liquidated or just taken off the exchanges. Bitcoin's dunked to 39,000. Actually, I think it touched 38,000 at some point in time. Nefarious. Yes, it did touch 38. It bounced back up on the daily, but let's see on the hourly chart. On the hourly chart, Bitcoin dunked to $38,500. Right now, it's kind of bouncing back up. And as such, everything is in the red except for the stable coins. It's a bloodbath out there again. So, in the news, Bitcoin proponent rips into central garbage XRP, foresees it crashing to virtually zero against BTC. I'm glad that there are outlets finally calling XRP what it is, man. Trash. It's the main cryptocurrency out there that is building a platform for centralized banks to be able to build their CBDCs on, and that's not what crypto is about, and it's a shame that XRP is following that path, but their XRP ledger is doing exactly that. So, Max Kaiser, self-proclaimed Bitcoin maxi. Oh, I don't like Max Kaiser. I didn't even realize that this was about this guy. But any case, I'll support that position. An American podcaster has once again blasted Ripple-promoted token XRP, stirring community rage. In his latest tirade on the X platform, Kaiser called XRP a centralized garbage in a post captioned XRP crash update. Kaiser, who is the advisor to El Salvador President Nayib Bukele, claimed XRP is mathematically programmed to trade at virtually zero against Bitcoin. He shared a screenshot of the XRP price plummeting. The sixth largest crypto by value was changing hands at 51 cents at publication time, which is 3.4% lower than yesterday and 11% lower than last week. Yeah, I'm not a fan of Kaiser, but I do support his thing. XRP, man, stay away from that stuff. By the way, just to remind you that there is a Meowcoin giveaway. In yesterday's video, I announced the rules for how to be eligible for the Meowcoin giveaway. There was a bit of a hiccup I had. I didn't realize that YouTube wasn't allowing the sharing of Twitter links. So to revise the rules, I guess, I posted an update below the video yesterday, but I'm not sure how many people actually saw it. So in this video, I'm going to bring it up once more. Please remember to go to Twitter, go to Meowcoin Twitter, find Meowcoin, first of all, follow the Meowcoin Twitter account, retweet or re-X one of their most recent tweets, and then come back here and get yourself a Meowcoin wallet. That's another thing. Get a Meowcoin wallet and then come back here and then post your Meowcoin wallet address below yesterday's video in order to be eligible for those things. Next week airdrop will be a little bit better arranged. I'll do something different, but so for today we'll keep it as it is, just to avoid any more chaos. So once again, get over to Twitter, follow Meowcoin on X, retweet one of their most recent tweets, get yourself a Meowcoin crypto wallet, and then come back to the video from yesterday and drop your Meowcoin wallet address below the video so I can use that in the draw. Now back to the news. OKX, OKB token. So OKX has a OKB token, and that thing crashed 50% in minutes following a wave of liquidations. The exchange has pledged to compensate users who suffered losses due to the incident. That's very interesting because that's not usually what exchanges do. I mean, when you enter leveraged trades, you do that at your own risk. I'm surprised to see this announcement by OKX. I mean, why would they be compensating people for something that they themselves chose to do? The people, I mean, yeah. OKB, the native token of leading cryptocurrency exchange OKX, plunged 50% in value today amidst a series of liquidations on leveraged trades on the platform. OKX or OKB dropped from around $52 down to $25 within minutes before recovering most of the losses, according to Chinese reporter Colin Wu. Let's have a quick look on TradingView. Oh yeah, look at that massive dump. So basically, this is on a daily. If we go on, I guess 4-hour chart, so as not to make it too intense. 1-hour chart. Okay. So this was just how many hours ago? 12 hours ago. Literally, a massive dump of 51%. Bang. I guess I didn't need to use math. It's 51.20 for $5. But the token did recover. According to the report, the flash crash was triggered by declining cryptocurrency prices overall, which led to the liquidation of multiple large leverage positions on the exchange, according to a tweet from OKX. This then set off a domino effect of further liquidations of staked lending products, margin trades, and cross-currency transactions. The steep drop of OKB's price appears to have been exacerbated by over-leveraged positions and cascading liquidations rather than fundamental weakness in the token itself. OKX tweeted that it will fully compensate users for any additional losses incurred due to the abnormal liquidations. I wonder what the additional losses would be. This is kind of a warning sign. So there's a bunch of stuff going on about on OKX. I mean, you know, liquidations are pretty normal, but nobody starts writing articles about an exchange, and the tokens of those exchanges don't dump massively like that. This would probably suggest that their liquidity is quite low, and I personally would be cautious about putting my money on the exchange for that very reason, because next thing we'll know, we'll be hearing that they're filing for bankruptcy or some such, and you'll be you won't have access to your coins, your stash on the exchange. OKX has been on a warpath recently for whatever reason. There was a hack recently. There were wallet problems. Now this there's some allegations of scams going on from some projects, and overall OKX seems to be in the targeting range for whatever reason. Crypto exchanges like OKX enable traders to open positions larger than what their capital would normally allow by using leverage, and that's a problem. When you do that, people go in with more leverage than they can afford. When they get liquidated, lose their money, and if these liquidations take place, then the exchanges are required to cover the expenses, because if people don't have the money to cover those expenses, then they simply can't pay it. So the exchanges have to cover those expenses, and that's troublesome for the exchanges. It's a risk scenario in which the exchanges and both the exchanges and traders can win big but also lose big, and when they do lose big, it falls on the exchanges to cover the expenses, because otherwise, you know, they're running into liquidity problems. A liquidity crunch is a fiasco for an exchange to handle, and they must handle it, otherwise it's bye-bye exchange. While leverage is a useful tool for advanced traders, events like today's show how excessive leverage can have unintended effects on the market. OKX stated it will be optimizing features such as leverage risk, tiers, risk control, rules, and liquidations mechanisms to prevent the reoccurrence of such incidents. A little too late, I would say. These things should be in place before the exchange, you know, decides to offer these features to their traders. First of all, to prevent traders from getting into situations in which they will be liquidated, and second of all, to protect itself as well. And the thing with the crypto market is that most traders, most of us are not real traders, and people go in with the assumption that crypto will make you money when it doesn't. Not necessarily. It's very volatile. It goes up and down in very quick successions. It's very easy to lose ground from beneath your feet, the house from around you. And so exchanges need to take care of that. Looks like OKX was not ready. Concentrix 1.8 million exploiter is tied to OKX and Luna Phi incidents, Certic K reports. So a couple of weeks ago I made a video about the OKX wallet having been hacked and $2 million worth of funds stolen. In a sophisticated chain of transaction, almost 2 million was stolen, ranking this as the 9th largest attack in crypto this month. These tokens were then exchanged for Ethereum and dispersed across 3 wallets, one of which is publicly identified as associated with the OKX exploit and Etherscan. And the most likely hack that hacked the Web3 security report published and pointed fingers is private key compromises as the most profitable method for exploiters. And private keys can be compromised through phishing scams, phishing attacks, honeycomb scams. If you don't know what honeycomb scams are, I've got a video on that, so check that out. And phishing scams, basically, never give out your keys, your private keys, to anyone. The only time that you will see your private keys is when you open a wallet. When you register for a new wallet, you should be receiving your private keys. You should be saving those private keys in a safe place somewhere. I would recommend to save it in written form somewhere in a place that you can store and keep and you know that you will not lose, and then save it in another place. Save it in more than one place. And of course, don't keep too many digital copies on your phone or your devices, because those can be hacked as well. And then of course, you should not be asked for any private keys very rarely on the internet. And if you are in a position where you are accessing a website and the website's asking you for private keys, then be very careful. Always make sure to double check the website to make sure that it's the original website, that it's not a phishing website, because that's a sure way to lose your keys and access and give away the access to your wallets. Scammers target investors with coordinated phishing emails. In a recent cybersecurity incident, scammers targeted major Web3 companies including Cointelegraph, Wallet Connect, and Token Terminal in a hacking and phishing attack. The attackers allegedly exploited vulnerabilities in the email service provider MailerLite, leading to the theft of over 580,000 from unsuspecting victims. This is highly problematic. ETH. This sounds like on Telegram. Telegram's got a lot of trading bot where people basically send ETH to the bot. You have to connect your wallet and then you go on trading, you send it to the bot. And so this is what it sounds like. That's probably what happened on Telegram. So some of the discussions I saw, people were suggesting, if you do use these trading bots, then make sure to go in and out. So if you lend access to a wallet, or if you send funds into that bot on Telegram, then do your trades and then get out and take your money out. But I mean, I would personally just be very careful about this for that very reason. Maybe have a separate wallet with a limited amount of funds in it, or I don't know. I avoid these things because I just don't trust them. I feel iffy about smart contracts to begin with, which is why I don't engage with them too much, other than out of necessity for certain wallets. But in the past I used to get involved into token projects, and I just found it to be silly to exchange your ETH for tokens for beginning projects, and then most likely losing your ETH and your tokens because those companies or those projects go bust or drop down to nil as soon as any interest in them wanes, and then they have years and years of possible recuperation or just completely vanishing from the face of the earth, and you lose both your ETH and the tokens, and it's just useless. Stick to mining, stick to coins. Cardano becomes top dog in crypto development race. Polkadot and Kusama follow. Cardano is doing some fantastic stuff apparently. Cardano overtook Polkadot as the project with the highest development activity. In the last 30 days, Cardano triumphed over Polkadot and its sister project Kusama to become the blockchain with highest development activity. And people are saying things are not being built on Cardano. And the last piece of information for today, you may remember Tornado Cash. The Tornado Cash developer asks for support ahead of trial that could set major precedent for crypto. Tornado Cash was a dApp which allowed basically the laundering of coins, so that send crypto from one address could be, I guess, I don't know exactly how it worked, but could be swapped out for other crypto, and it would erase the trace of where that crypto came from. And so the founder of sanctioned crypto mixed Tornado Cash is asking for financial help ahead of criminal trial in the United States. Roman Storm was arrested last year and charged by the US Department of Justice for allegedly laundering $1 billion in criminal proceeds. Criminal proceeds, questionable. But in a new video posted on the social media platform, Storm is asking for donations to help fund his legal defense and saying, "Honestly, I'm scared." He warns that the outcome of this trial will have significant implications for the future of digital assets. Hi, my name is Roman Storm. I guess this is a message from him. I'm a passionate software developer, and 4 years ago I helped develop Tornado Cash, an open source non-custodial privacy protocol. A few months ago, despite my ongoing cooperation with the US authorities, heavily armed FBI agents raided my home at 6 a.m. and arrested me in front of my 3-year-old daughter. My legal team and I are going to put forth a strong defense at trial, not just for my family's sake, but for the future software developers and financial privacy. Folks, I need your help. Whether you're a passionate developer like me involved in Web3 or just care about software and privacy, this legal battle will affect you. So please help contribute to my legal defense, because this case will set a major precedent for years to come. Justice DAO has put together a number of options to donate. Will you support this cause? Digital Cash is an Ethereum-based coin mixing system that helps users conceal their digital assets. Torn is the 1,421st ranked crypto by market cap. The project was sanctioned by the US in 2022 for national security purposes. Of course, the gov doesn't want to know, money laundering is not okay. As long as they do it, it's fine, but anybody else, that's not an okay thing to do. Last year, Storm, alongside Roman Semenov, another Tornado Cash founder, was charged by the DOJ with conspiracy to help North Korea hacking group Lazarus launder money. And Lazarus are accused of having done some major hacks. I think I talked about it in the last video on where $6 billion worth of crypto were stolen, and Lazarus was involved in one of the biggest hacks ever performed. And of course, Lazarus, we don't know who Lazarus is. It's some name that the states, the Department of Justice in the States has given to supposedly North Korean hacker group. Whether that's true or not, again, they can't point fingers at Russia, so they find the next best villain, because we all need a good villain to keep our minds in check. Otherwise, the crowd goes rampant. That's it for these updates. Make sure to check out the subscriptions on the channel if you would like to. If you are in the mood of supporting the channel, if you want to buy me a coffee once in a while, in a month, then check out the memberships on the channel. There are 2 levels: become a crypto kitty or a crypto cat. You can check those out underneath the video just simply by joining, clicking the join button or subscribe button or whatever it is, the memberships. Also remember that there is the ongoing Meowcoin giveaway, so don't miss on that opportunity, because it's free crypto and it's easy to get. Also remember to smash up the likes, subscribe to the channel, share this video with everybody else, and I will see you in the next video. Crypto Father out. Peace.